Hi, Nelson. Thank you so much for coming to the Investor Talk. How's it going?
All good. How are you, Max? Really happy to be here. I was just commenting. I feel like we had a really good conversation last time we spoke, so I'm super happy to extend that conversation and just make something interesting for our people.
Thank you. The pleasure is mine. So, as we start, would you give an intro to yourself, who you are, where you come from?
Very cool. So my name is Nelson. I am the CEO of XFounders Accelerator, and I've been in tech, I would say, since 2013, always working on the fields of leadership development, organizational design, and building teams. I came across blockchain in 2017, at the time through a project called Helium. It's what we would call Deepin these days, but the term just wasn't around so much back then. And it's interesting. When you ask people why they got into blockchain, it's usually one of three things. It's either the potential for financial gains, which is legitimate. It's either the technology behind blockchain or the philosophy of decentralization. And for me, 100%, it was the philosophy of decentralization, this ability to take back as rights things that have been commoditized as privileges, and now we pay third parties for, from free flow of information, free flow of values, peer-to-peer transactions of between you and me, for example. All of this has been commoditized, and the ability to bring that back was really exciting to me. So I started advising for as many projects in Web3 as I could, for as many founders as well. This led into advising for a couple of VCs and accelerators, so starting to get into the medium back then. In 2021, I joined Gate.io, the exchange, as their global head of people and operations. I later did the same job for 1inch. And in 2023, I came across the founders of XFounders, of which I'm now the CEO. I'm happy to go into that as well once we start maybe talking a little bit about what we do. And that's it. On a personal side, no wife, no kids, beautiful girlfriend, beautiful home here in El Salvador, and a dog who is usually sitting next to me trying to be my intern. But today, I don't know what he's doing. He's just out and about with his wife.
It's working around. Of
Yes. He's running some errands.
course.
Solving mysteries is usually what he's doing around the house on a
Dogs,
mission.
dogs are beautiful. Uh, so, thank you so much for the introduction to yourself. Let's move to what actually we do, guys.
Very cool. So, at X Founders, and for context, because this is interesting, uh, I can talk trash about most accelerators because I've worked with them. So I've been on the other side, and to the point of highlighting our differentiating factors. So what you get today with accelerators, a lot of them is these online boot camps where you get a lot of this, like tiny little Zoom windows with mentors, quote unquote, really talking at you one way or another. They end up selling themselves and their services to you rather than trying to mentor you throughout the boot camp. You have maybe 2 calls a week for 5 or 6 weeks. That's it. Very low value adding. The investor side, you get to the demo day. These accelerators promise you like 30 VCs will be there. When you get there, it's maybe like 6 people, half of them with their cameras off. You don't even know if it's a decision maker or a junior BD who's there, and they know you for 3 minutes. So no wonder. And then they have the audacity of asking these startups for 8, 10, I've seen 12% equity for this Fugazi, which is nothing. Yeah. So we figured we'd do something different. I had been working with accelerators. Both the other founders had been founders working with accelerators as well. So we've seen both ends of the scheme, and we figured let's do things the hard way. So at X Founders, what we do is we build 30-day programs, so 4-week boot camps that happen offline, meaning for 30 days, 10 startups, we fly them over to one location. And these founders, they work together, they learn together, they eat together, they sleep together. Well, the same venue, different quarters, but they live together for 30 days. They exchange deal flow, they exchange network access, they brainstorm together on each other's issues. So right there, at the founder layer, it's much more value adding. And to me, this is really what acceleration is as compression of time, meaning you achieve more in less time than you would in more time, 3 months,
Oh,
6 months,
yeah.
1 year. Yeah. This is what acceleration was meant to be initially. Then the mentors fly over. They don't spend 40 minutes talking at you in a rush. They spend 3, 4, 5 days on campus with you. You have workshops in the morning. You have one-on-one time in the afternoon. You're having breakfast. You open up your laptop. You pull up these people. They workshop your issues with you. And you have a product expert. You have a compliance expert. You have a talent management expert. You have a tokenomics. So you have people coming in and out throughout the week where you get actual value exchange with them. Yeah. So because they have time to be there. There's trust to be built. And actually, we have a really cool conversion rate from mentor to advisor or C-level executive at these startups after our bootcamp. So this signals that trust is built in. And same for the investors. The investors come over, they spend a week, 2 weeks, maybe the whole month on site. And at the end of the day, they make much better decisions. So, I always say in this average distribution curve, it's usually the dumb investor and the genius investor that invest because they like the founder for different reasons, but the same logic at the end of the day. And so much in this industry in Web3 is about community and trust in the faces and going beyond this founder that's just a tiny little PFP that you don't know and you can't dox. So because we do this on site, we actually have 3 streams of investment at our boot camps. We have our cap table investors who go to the demo day. They know they're expected to invest, but they've spent time before with those startups, not just the 3 minutes of the pitch. We have our network investors who also come to the bootcamp just to see the startups, talk to them. There's deals being exchanged there as well. And we negotiate with our sponsor ecosystem or chain, in this case, for example, StartNet, a grant pool, in this case, roughly around $1 million per startup, that it's a grant based. So depending on the level of integration, the startup wants to offer this sponsor on their technology, there's different tiers there of support financially that they can give. But all of this to say, none of this is possible on an online bootcamp.
No
It's
way.
just not. You don't see the investors this long. You don't see the mentors this long. You don't spend time with the actual startups there. So we also take advantage of the fact that we have everybody online, and we figured we would kick the media door in, and we shoot a documental series on site. Meaning, it's not just content for, I don't know, Instagram or Reels or TikTok. It's an actual full-length documental series of 10 episodes. The first season we shot in Bali with Solana. It's on like 2.5 million views now on YouTube. The second season we shot here in the summer in El Salvador, where I live, for our boot camp here. And the first episode came out, I think, maybe 4 weeks ago. It's already on maybe 40,000 views. The last episode, really super cool startup, already has 130,000 viewers. So it's still ongoing. You can find it on YouTube. But the point is why I mentioned this. We want to make this better than Shark Tank because, again, at Shark Tank, you forget the founder's name the moment he walks out the door because you've known him for 3 minutes. Here, we give you a full-length episode about you as a founder, your founder story. There's pictures of you as a kid. There's shots of you at the office. There's shots of you workshopping your issues as well. There's, how do you call it, traction mechanics that we put in. For example, with OKX, what we did, there's a QR code on the corner. You can scan it. There's my voice going, open an account on OKX, get $5 with your first transaction. So basically what this means is it's a real go-to-market tool that these startups leave the bootcamp with that is evergreen material that they can share with customers, with partners. And it's just access to hundreds of thousands of viewers worldwide, from being through the bootcamp as well. So for us, it's hell because, with this level of investment on each startup, I can't take in 2,000 per year. I'm not Y Combinator where I can just take in 2,000, invest close to nothing, hope somebody makes it, but then it's up to you. We're taking in 40 this year, maybe 50. So at 50 startups per year, one, we have to be really criterious with the startups we take in. And secondly, my team really has to make sure we support the startups after they come up. Because at 40 per year, there's no numbers game for us. The math just doesn't add up for us to just spray and
No.
pray at 40 per year. So long-winded, but this is kind of the things that we're proud of, yes. And to cap it all, I guess I have to say this because I did talk trash about other accelerators taking in so much equity. Historically, for all of this and the value that this adds to your project, historically, we've taken not 6, 8, 10, 12, but we've taken 0.5, 1. I think the maximum we've taken historically, equity or tokens, has been 2%. So the reason I mention all of this is just to paint a very clear picture of what we're proud of at XFounders, of the massive value and effort we put in to delivering to the startups we take in versus what's 0.5 equity or tokens, what's 1, what's 2, compared to what the market is offering. These same founders, these same startups, adding much more equity for a value dilution program at the end of the day. So this is why I onboarded XFounders, why I believe in what we're doing. And I think it's clear how much it differs from the work that other accelerators are doing. And at the end of the day, I'm a builder. Like if I can bring you something and say, hey, I made this for you, this is what makes me excited. So to be expected to systemically bring value to these founders and startups that I've been working with since 2017 is really what gets me excited at the end of the day. And I hope that comes across.
Thank you so much, Nelson, to be so precise. The 1-2% is the only cost for startups joining your accelerator?
Yeah, 100%. It's 1 to 2%. Historically, that's been the case. Obviously, it's negotiated because we want to be fair to the startup. So the main criteria will be the startup's valuation is what is going to put a figure on our mind, first of all, in terms of what equity or tokens we can take. But then we take it case by case. If you have an amazing project with an amazing case, we're happy to negotiate equity or tokens or a mix of both. Yes. The reason this works is we've had in the past maybe an average valuation of our startups of 30 million. Right now, I think the biggest valuation startup we have is 100 million. This is Folks Finance. They were the biggest DeFi protocol on Algorand. They came into our startup, to our bootcamp at 75 mil. About 3 months later, they were at 100 mil. They had a TGE November last year, which we also supported with. What this means is because we have a solid base of startups with high valuation that we are comfortable with 1-2% that adds up, we can take bets on smaller startups with the same equity. And then the model makes sense to us because at the end of the day, we're not like super pre-seed heavy, but also not going into series B, for example, where the stakes are much, much higher. So at the end of the day, we found a way to make the same model work, both to support smaller startups and bigger startups also we have in our portfolio. In terms of the bootcamp, we just take a symbolic retainer for 5K that is reimbursed the day after the end of the bootcamp. This is just to signal some commitment that because we're taking 10 startups per bootcamp, we want you to show up. I don't want you just saying, yes, I'll be there. And then some other startup is not being able to go because I said yes to you. And then you don't show up. So it's just to signal some commitment. The Monday after the last day of the bootcamp, the 5K are fully reimbursed. So yeah, the only cost to join the bootcamp, which is the gateway to the accelerator, it's not just for the bootcamp, is historically it's been up to 2% that we've taken. But again, I just want to mention, it's not just one bootcamp, it's every bootcamp in perpetuity. So this year we're doing 5, and it's continued support after the bootcamp as well.
In terms of criteria, for criteria, do you have any target stage?
So it depends on bootcamp to bootcamp, to be honest. Obviously, as anyone managing a portfolio knows, diversity is key. So we actually don't take the same criteria to every bootcamp. So for example, up until summer of 2025, we were looking at startups that already had 1 to 5 million in investment already, that were already post-revenue, and either had a token already or TGE, so the token generation event, so launching a token, 3 to 9 months down the line. When we came here to El Salvador, and I'm also happy to elaborate on why, where we find emerging markets very interesting as opposed to overcapitalized markets like San Francisco or Dubai. But when we came to El Salvador, for example, looking for startups in Latin America, we had to review our criteria. So we were looking for startups with at least 200K committed, at least a product market fit proven, so some traction, And we completely disregarded the generation of a token because we're not also an accelerator that will push you for TGE so we can make a quick buck. Yeah. So actually, we take it bootcamp by bootcamp in terms of the criteria we are looking for. Yeah. So right now, for the bootcamps we're having this year, because we're also focusing on emerging markets, Southeast Asia and Latin America, we're looking mostly for startups who have already or at least 10,000 MRR that they can show evidence for, at least 100K to 500K of investment, external investment already. So founder investment doesn't count. And again, having a TGE or a token is not a mandatory criteria. It makes sense if it makes sense for you as a product and if you have utility for it. Again, we are far from being one of these funds or startups that will push you to launch a token so you can sell quickly and make a buck. So we're actually quite flexible in terms of what our thesis is because we do want to diversify. We've been doing this for 3 years now. In 3 years, we've had 4 boot camps. This year alone, we're having 5 boot camps. So we're having as many boot camps in 1 year as we had in the past 3. For us, this is great because it means just in terms of startup intake in our own valuation as an accelerator is going to skyrocket. So we want to be very conscious about what our thesis is, especially considering the turbulent year ahead, which I expect it to be. We want to look at it bootcamp by bootcamp. So at the end of the year, we spread our bets across a reasonable thesis margin.
Many accelerators, they run these boot camps, these, let's say, 8 to 12 weeks training, and after they leave the startups. In your case, how do you stay with these guys when they leave your acceleration program?
Very good. So during the boot camp, and this is important to highlight, what we're good at, what we expertise at, and what we focus on supporting is distribution, traction, go-to-market. Yes, we're not an accelerator for pitch polishing or for startups to try to raise their valuation based on consecutive of fundraising rounds where the current guy pays for the valuation of the next guy. So that's not what we do. We're not here to help startups. And I want to be clear for startups watching, we are not the accelerator to help you base your valuation based on the tech, which 9 times out of 10 is not proprietary anyway, or consecutive rounds of raising. What we do is help you with being sustainable, generating revenue, product market fit. So distribution, traction, revenue is what we focus on, where we can help you. And that's also, depending on how much a startup is focusing on this, that's a selection criteria for us as well. How reasonable, how level-headed, how much sustainability comes out of the founder's mouth when he's kind of talking about his own startup. So our focus on site, on campus during the boot camp for 30 days and after focuses on that. So all of our bootcamp content, which is only part of what we do, is focused on distribution, traction, go-to-market, product, tokenomics, compliance, marketing as well, distribution. This is what we focus on. Then when the bootcamp is over, we have 3 tiers of support that we continue to provide online. So from network access to investment access as well, to expertise and advisory from our own board of advisors. Depending if you are seed stage, this niche we found, which is pre-Series A or Series A, we have different packs of support that we offer that we continue to support you online after the bootcamp. Yes. For example, if you are earlier stage, maybe you need advisory more than you need intros for raising. If you're pre-Series A, maybe you got the experts in the advisory already on board on your own advisory board. What you need is intros for fundraising for some real heavy hitters. So depending on where you are, we have packs of support we offer, continuing after the bootcamp, depending on what exactly you need. Always with a focus on distribution, traction, go-to-market.
So you already say you differentiate from bootcamp to bootcamp, but on average, so far, it's been mostly pre-seed stage startups or more moving to the A round?
Yes, moving to the A round. We had one boot camp. Our very first boot camp was with ICP. We took in about 20 startups at pre-seed. So the purpose of that boot camp was to go from ideation to MVP. We've moved past that now. And now our focus, our niche is startups that I would call pre-series A. That I would call pre-series A, yes. Meaning you have your product or a couple of products locked down. You have product market fit. You have traction, revenue. You need to scale, and you're looking to scale your products based on a solid thesis that's already proven. This is a niche that we target. And also, this works well with our model because, for example, you have startups like I mentioned, like Folks Finance, for example, or Bitwala or Green Mining DAO. All of these startups, they won't give, and we've had these conversations, they won't give Techstars 7.5%. They won't give YC 10%. They won't give A16Z 9%. But they did give XFounders up to 2%. Because and these are startups that usually would not look to acceleration, but because of the disparity between the value we bring and let's call it the cost, equity or tokens wise, is so competitive. They did sit down at a table with us, and at the end of the day, they're part of our accelerator. So this niche that we target mostly of pre-series A allows us to offer a really strong value proposition to these startups that they would not find anywhere, or at least not for the terms we're able to extend to them.
You've been working with many startups so far. You had plenty of them coming. Based on experience, right? This is for the founders to understand which skills really define a very good founder.
Mm-hmm.
Especially when it comes to the early
That's
stage,
very
where
interesting.
it's a very hard place to be.
That's very interesting. Okay, I would say a couple. The main one I would say is discipline. And discipline means very many things. Discipline doesn't mean you wake up, you read the 5 a.m. club book, whatever. It doesn't mean you wake up at 4 a.m. to go run at 5. Discipline means, it also doesn't mean that you quit your job to focus 100% on a startup. If you have a job through which you can fund your startup, then by all means keep it, yes? What I mean by discipline, for example, one of the reasons I love emerging markets is because we find this founder discipline specifically where I love to see it, which is focusing on problems that matter today. If you go to San Francisco, if you go to Dubai, unfortunately, money is being thrown at problems that may or may not exist 7 years from now. And that's attractive. People want to go to San Francisco. Any loser can go to Dubai and can arrive in Dubai. Any loser can land in Dubai at 10 a.m. and be at a VIP party at 7 p.m. and feel like they made it. Where's the discipline in actually building something like that? So many founders I meet go to Dubai to raise, and after 2 years, they leave Dubai with less money than they got there because they did raise out of a very short circular round of people, because in Dubai, only foreigners invest in foreigners. The local money is in Abu Dhabi. But they spend every dollar they raise, they either spend it on socializing, trying to raise the next round, or expensive girlfriends. And this is what it is. And at the end of the day, the money's not there, the product not there, the startup's not there. Zero discipline. If you come to emerging markets like Southeast Asia or Latin America, there's this sharp founder discipline where any startup here that has survived over the 2-year hump, for sure, they're surviving off of revenue. So they have to focus. They need this discipline of focusing, solving problems that exist today. The next million users that everybody talks about, they're not these sexy people in the overregulated Europe where I'm from. So I love Europe, but I have to be real about this. They're not in sexy San Francisco. They're not in sexy Dubai. They're in emerging markets where people don't know there's technology already that solves their problems. And sometimes it's not sexy. Look, I use a QR code every day. I couldn't care less how a QR code works. I don't care. I just want to scan it and it takes me somewhere. You find founders here with this discipline of trying to focus on problems that happen today. So this to me is a huge predictor of success in founders. Are you focused? Are you ignoring the noise of where the money is going? Are you focusing on solving issues that are on people's minds today? Yes or no? The second one, I would also pin to discipline, which is to focus on, if you're going to fall in love with something, fall in love with the problem you're trying to solve, not the solution you came up with. A lot of founders fall prey to their own vanity, where they feel so smart and people applaud in demo days, and all their family, they don't understand what they're doing. So they say, oh my God, you're so smart, you're in tech, whatever. Fall in love with the solution that you're trying to solve, not rather fall in love with the problem you're trying to solve, not the solution. If you fall in love with a problem, you will listen to the market signals and you will iterate again and again and again until you actually solve that issue. If you fall in love with your solution because you feel so smart, the market's going to tell you it's not going to work, but you're going to ignore those signals because you're going to continue to keep pushing for that one solution that maybe doesn't solve the problem you came into this business for anyway. And you're going to find out at the end of that cycle, either you're going to have to think of something else too late, or what's worse, maybe you're going to have to go and get one of those regular jobs if your solution doesn't work and you can't call yourself a founder anymore. But for me, founder mindset is much more about falling in love with a problem and trying as many times as possible to solve and fix that problem for the world than to have this vanity of, look, I have a solution. This gets me into interesting rooms and interesting conversations. So I'm going to continue to push it regardless of the market telling me that it doesn't work. So I would pin it all to discipline. Discipline of trying to solve problems that exist today, and discipline of falling in love with a problem, not the solution. So when I talk to founders, this is kind of where my mind is at.
Those factors are the same that influence your way to decide or accept or not in your accelerator?
100%. As mentioned, we're not a pitch polishing accelerator. We're not here to support you raise consecutive rounds. We're here to support you finding a solution that actually works and makes it sustainable. Going back to distribution, traction, revenue. All of this has discipline to work for a solution written all over it. So this is what we work for. And then on the other side, one of the things that we also help with on a long term is product market fit. This is why we have amazing advisors. This is why we keep inviting our founders to all of the boot camps that we make, because as your own product and as your own founder journey evolves, you will find new lessons and new people to support you through that journey, coming to different boot camps as well, with a point of supporting you with your product journey. So again, focusing on, does my product fit the problem I'm trying to solve? So absolutely. It's not so straightforward that I have a checklist and I go, this guy has discipline or this girl has discipline, yes or no. It's about a fit that they bring mindset wise to the actual support we're able to offer. So our offer extends particularly well to founders with this discipline of product market fit, because this is what we expertise at. So 100%, this weighs in to our selection process for our startups.
You have been very clear. We are not focused on pitching, teaching how to pitch, all this kind of stuff, but they come to pitch to you. So what would you like to see in a pitch? I mean, a convincing pitch, because there are so many pitches say nothing.
Absolutely. So one thing, obviously, we do have a demo day at the end of the boot camp. The point is for them to also know how to present themselves, but sustainably. So in our boot camps, we do have workshops about pitching. We have rehearsal pitching. They pitch to us at least once a week. So it's about fine tuning and making them good at pitching. What I mean is, don't come to us if you just want to work on the pitch, but don't do the homework. Yeah. So obviously, it's like having, how can I put this? You present a 5-star Michelin star meal, yes, as a result of years of learning with tough chefs on French cuisine or Italian cuisine, or going through a process. So when you present a plate to me, this gourmet dish, this is 15 years of hard work, from taking classes, from people telling you your food is shit, to waking up at 4 a.m. to welcome suppliers at the door of your restaurant. All of this comes together when you put together a dish. If you watch a TikTok about a dish and you present to me the same dish, it's not going to be the same. So we're not here to put in the presentation without the work. We're here to make you put in the work. So in terms of having what we look for in pitches, I mostly look for in pitches that founders present to us when they want to join the accelerator. I look for the roadmap. Yes, I assume we do due diligence, obviously, but I'm looking for what they tell me about in the roadmap. If one, you're super strict on your roadmap, I read lack of flexibility. You're probably one of these founders where you're like a train. You're one track only. You lack lateral thinking. If the market throws you a curveball, if an investor bails on you, if your co-founder quits, what are you going to do? So you need to have flexibility as well. But at the same time, there's a balance. If you come to me and you say, oh, my roadmap is whatever you want, I'm flexible, I'm open, that also tells me, like, signals to me like serious lack of leadership. If you're telling me as an investor that your roadmap is whatever I want, you're telling the same thing to every other investor you're pitching. And at the end of the day, your cap table is going to collapse because you're handing over the keys to the car. And it's one thing to say, join me on this ride. That's not to say, here's the keys to the car to like 4 people who join you for a run, for a fund. Especially if you run into one of these activist investors, which I didn't know about this term until like maybe 4 years ago, which are people who want to take the keys to the car. So an activist investor isn't somebody who's on the streets protesting. An activist investor, for those of you who don't know, is somebody who puts in money, but they want a seat at the executive table. More likely than not, he will tell you, my money, my decision making. So what I look for the most is the roadmap. And again, looking for a fit to where we can support with our accelerator. Look, if you're good, at the end of the day, you're either going to lie to me or not on your pitch. Due diligence can only go so deep. There's a point where I have to trust. And again, we go back to this curve of, do I trust the founder or not? What I want to hear about, because that's what I can steer and influence, is the roadmap. So tell me about the future. What are you excited about in the next 6 to 12, 18 months, if you can think that long? What's the critical path project management wise? What's the critical path for the next 12 months? What are some interesting milestones that are there? Because then I can challenge your reasoning. If you tell me you have X much traction, if you tell me you have, these soft commits from people, I can ask you for some documentation, but your reasoning, I'm going to learn from your roadmap. And when I challenge that, how you answer those questions about the future is where I get the most information from. So for me, usually the most interesting part of a pitch, definitely the roadmap.
What about approaching investors? There are funders that just really spray and pray, which means massive email list, buying email list everywhere and spamming. I'm not sure is the right way to go. So what do you advise them? How they should approach investors? They should start cultivating with them, or straightforward, they need money?
This is also very interesting. And this touches on a point that I feel personally about. So 2 things. One advice that is general. And one thing leads into the other. Spray and pray doesn't work. Doesn't work for me when I am approached to invest. And as we ourselves raise also at XFounders, it doesn't work. You're another guy in an inbox. People don't care. You either have a killer offer, and killer often means suicidal, where it's so good that it's stupid. So either you bring an offer that on the one-liner, it's so different from anything any other founder is saying that there's a reason why they're not saying it, because it's self-destructive. And that grabs attention, but you don't want to go into any negotiation stage like that. So either you have a killer door opener for cold outreach, which I do not advise anybody to do, because at some point, there's a difference between amazing terms for an investor and doing self-harm to yourself as a founder. Yes, it's important to stay the line. Warm intros work. Yes, so cultivating relationships, showing proof of work, working your network, whatever your network is, people who know your work, who've worked with you in the past. This works much, much better. Naturally, this is what gets most people nervous because a lot of founders, either because of imposter syndrome or because they know they're on thin ice in their value proposition. Once we dig, it's gold plated, but if you scratch a little bit, there's cement beneath the gold. A lot of founders know that their value proposition isn't that good, but they hope that investors find out too late, and they'll work it. And what they'll say often is, "We'll build the plane and fly the plane." But they're promising you they'll get you to the destination. So warm intros work a lot better, but they require hard work, and they require honesty, and they require proof of work, which is what leaves a lot of founders a lot more honest. One, because the conversion cycle is much, much slower, and they need money now like a drug addict needs some money to go out there on the streets. But warm intros, warm connections work much, much better. So if you know somebody who can make an intro and vouch for you, that works much better. If you want to approach somebody, just saying, "Hey, I'm doing this. I've noticed this falls into your narrative and your thesis as an investor. I would just like to keep you updated. So is there a contact I can keep you updated through?" Something along these lines. And then weekly, bi-weekly, monthly, you keep the person updated. You show some traction. You're strategic about where in your roadmap you're sending updates to this person. This works much, much better. And now we come to the point that is personal to me. As an investor, as an accelerator, as a mentor, as an advisor, as a speaker, I have to both filter people who approach me, and I have to approach people. So much in everything we do is about, or could be about, community and offering help. This is a long lost art. Offering something first before trying to extract value. If you go to each networking opportunity with a transactional approach of, where can I get value from this? And if it's zero, then I don't care about this person, I'm out. Your network's going to look like a long empty table, because nobody will care about you, because at the end of the day, you cared about nobody. I've stopped expecting it, but the approach I do come to every interaction, hopefully successfully, is, what can I do for you before anything else? Or at the end of a conversation, if I can't find exactly something that I can do for this person, I typically close with the question, "Look, you know what I do? If there's anything at all you feel I can support you, please consider me a friend to you, to what you're doing. If anything pops up, just let me know. If I can, I will." And that's a great door for the person to even circle back. And I'm happy. And trust me, it's not because of lack of people in my life. But I'm happy to offer first and let opportunity. I've had so many people do things for me that I didn't have to ask for. And 99 times out of 100, it's because somehow they circled back, because I didn't make it transactional. So I guess my biggest advice for people out there is, let's try, even if it's just like behavioral conditioning, even if you don't feel it, fake it till you make it, let's try to bring back a little bit the habit of thinking, what can we offer the other side? And that will bring opportunities. If so, if not, you did something good for somebody. That's that. Why would you feel bad about that anyway? And try to tone down this hustler mentality of, in 30 seconds, what do you do? Try to understand what you do. If you can do something for me. If not, let me cut this conversation short. I'm off to the next guy. It's become ugly at some point, So it also doesn't help you, because if everybody's doing this, if you go to a conference, if you go to a circle, if you go to a country, any closed circle, at the end of the day, you're creating a culture that people are going to give back the same attitude. And when it's your time to raise, when it's your time to look for B2B deals, when it's your time to ask for an intro, people are going to be looking at you. And if you cannot give anything to them, they also won't care about you. But guess what? You've been contributing to this culture wherever you exist. So this would be my advice. Let's try to focus a little bit more on what it is we can do for people, and offering before we ask, and drop a little bit this transactional mentality, because people call it efficiency. I network efficiently. No, it just means you're an asshole. It just means if you can take anything, you don't care about people. Well, guess what? Every contact you make is a bridge you're going to burn, because at some point you're going to go back to them and say, hey, how have you been? We haven't spoken 6 months. I know you know this guy on LinkedIn. Can you intro me to this guy? Because I'm raising. No, because you're going to burn that bridge, you know? So if you think of it from the humanity side, let's try to get more value free flowing. If you want to think about it from the efficiency side, at least do it for this reason. Every contact you make that is obvious, you're just trying to get value and not give anything, trust me, that's a bridge you're burning. That's the last time. If that person's smart, that's the last time they're picking up the phone. So if you want people to keep picking up the phone, at least try to give something back to them.
I can't agree more. I'm
glad.
We don't have so much time, but let me touch a bit the cap table. You invest early, but during my life in venture capital, investing in startups, mentoring them, advising, the cap table, when they come 12 months, 24 months after inception, it's already destroyed. Maybe they gave too much, or the people inside the cap table are not the right one. Can you just, based on experience, share with them what you think about? I mean, how founders should come to you, how the cap table should be composed?
Very good. One thing that, even from my time as an advisor, that I always advise founders to do was to, especially if you're early stage, money without help isn't investing, it's just debt. That's what it is. And there's a lot of super predatory investors there as well, who are happy to sign term sheets where they get super aggressive with the terms. I would say don't be afraid to stand your line, and at least two things that are important that not every investor will accept, but the right ones will. And this will help you. It might make it a little bit harder to raise now, but in 12, 24 months, as you mentioned, you'll find yourself surrounded by better people. One is to find investors that are happy to allocate support to you, not just open the network, but actual support like connections, advisory, people who can support you throughout the product, the product development stage or the product market fit. The second one would be, and these are things that should go on the contract, and they might seem a little bit aggressive, but I actually respect founders who come to us with these terms. One, what we would call in other terms like optional shares, meaning that an investor cannot sell their shares without the founder's approval, meaning that an investor cannot sell your debt to another party who you don't know what their plans are, who will probably push you to either a TGE who doesn't help you, or will push you towards default or an exit so they get their money back. So this avoids investors turning into loan sharks or selling your shares to loan sharks. So this is number one. The second one would be the option to buy back at certain milestones at an agreed price or an agreed percentile of the original valuation, meaning you're either with us for the long run until we all get rich together, or if you don't like where this is going, or you feel like you want an opportunity to exit sooner, then before you go out and do this aggressively, give us a chance to buy back those shares with you in profit. So at no money loss, and there are several ways to do this. Either just, buy back in full, or you get a portion of whatever revenue looks like on a monthly basis until you get your money back plus X%. So you're okay always, but at least the option to always buy back from the investor with original cost plus X. Yes. So these are two very easy to understand, harder to negotiate, but effective triggers that if you're listening to this, if you're an investor in a startup, you know exactly why you either like or you don't like these terms.
Yeah.
But they're easier to negotiate, and they avoid the particular problem you mentioned, which is finding yourself 12 months or 24 months down the line, surrounded by people who onboarded a given thesis, but their thesis changed, or because funds go through rough patches as well, and they look at you and they see where can we make a quick buck so we can finance the next guy. If you're a startup that 3 years ago got funded because you were, I don't know, you were RWA, and it was hype and not so competitive, and you're not doing so well because it's hyper competitive now, and a fund wants to liquidate their position on your startup so they can fund a position on AI because that's what's hot right now. It's okay to try to defend yourself from that. So these are kind of, at least just off the top of my head, two terms that you should negotiate with investors, to make sure that the people you do get on board, one, are people who understand this and understand they're locked in for the long term, or at least it's a filter against people who don't understand this. So at least you're getting people who want to give you investment and not debt disguised as investment.
That is dangerous, especially when you're young. Very
100%.
dangerous. Where do you see the trend going? I mean, except AI, where is everywhere, but in terms of pure industry, right, and verticals, where do you see the trend going for the next 1-2 years? I mean, maybe 2 years is too much because everything changed so quickly now. But for this year, 2026, what would be the most funded sectors for you, in your opinion?
I would say asset tokenization, one of them for sure. It's also getting hyper competitive, but people keep finding out new things to tokenize. Tokenization is highly tied with local regulation as well, which means it's not easy for a player to go global, and it's much easier for players to act locally. So, yes, it's a lot of people tokenizing, everything in their mothers all over the world, but the chances are they can only tokenize locally due to regulation. So that helps you find a niche where you exist. And I would say the other one is payment rails. So, and this also connects with emerging markets. People are finding out that in Africa, there's more cell phones than there are computers. You can now send payments without a smartphone and without access to internet even. This is, by the way, the product of one of our startups, Element Pay. On an old, I know you and I, maybe some of the founders listening don't know it, but I know you and I know what a Nokia 3310 is. If you have one of those, you can send payments through one of those today. Yeah. So basically, I would say payment rails, which to me is beautiful because it connects back to peer-to-peer exchange of information and value. But I would say payment rails are a big narrative. So PayFi, if you want to call it this way, PayFi and RWA. Are two big narratives for this year. One, because RWA's new technology is getting huge institutional adoption. Regulation is following up much quickly to RWA than it did to other narratives. And then PayFi, I would say. A lot of credit card options coming in, a lot of banking for the bankless, a lot of cell phone, GMS based transaction startups coming up. So I would say like remittance projects in Latin America, huge as well. People want to send money, like a worker in the United States just wants to send $500 a month to their grandmother, and maybe, just maybe, UPS or American Express doesn't charge 15% of that hard-earned money. Oh, there's a solution for that now. So I would say PayFi and RWA are two interesting narratives, aside from AI, which you mentioned and we've excluded. I would say are two interesting narratives to pay attention to this cycle.
Let me close with something a bit more personal. You are involved in accelerators, which is extraordinarily hands-on, very tiring, and very worked. Being investor, deploying, as you said before, just money, it's not that tough. I mean, it's tough to give the money out of your pocket if you don't have so many. If you have so many, not even probably, but it's not hands-on, right? You don't need a daily work. Accelerator, it is. Even a tough business model, in my opinion. And also you invest yourself. What brings you here? Why decided to be an investor, be involved in accelerating startups?
That's an amazing question. I would say this touches on something I mentioned earlier. I'm a builder at the end of the day. I can't help it. I want to be involved where things are being made, I left my C-level role at Gate.io with a six-figure salary, which is not incredible, but for a 9 to 5, it's some people would think twice because it was getting too cozy. And again, at the end of the day, if I can bring you something and say, hey, this is something, I made this for you, here it is. I like to serve. Even in my leadership style, is servant leadership all the way. Everybody knows this about me. I'm known for this. If I can bring you something, that's what makes me the happiest. Like if I can do something with or for you. So to be at a place, whether through investing or whether through the accelerator, and I'm adding to this, I'm opening a fund this year as well. But to be at a place where systemically I'm expected to help others build is happy days for me. I go to bed, I can't sleep because I'm excited. I wake up in the morning and I get out of bed excited because it's 5 a.m. But I want to go do what I have to do right now. So it has to do with my nature. I love building things. And if I can be involved with 100 things that are being built, strategically, surgically, but high impact, that's what makes me the happiest. So that's why I chose this life. It's I get to be involved 100 years from now. Not me, but somebody will be able to point at something and say, "Oh, he was involved in this. He was involved in this. He was involved in this." And it doesn't mean I did the whole thing. It just means I helped. So this is kind of what my raison d'être, my reason of being right now, and why I chose this path. It's not because I like the easy life for sure, but it's highly rewarding.
It is not. Indeed, it is not.
Yeah.
Would you like to close with a message to founders?
For founders, again, I just want to highlight one thing I said. Because if you nail this, everything else will find its place. Fall in love with the problem you're trying to solve, not the solution. As a founder, you need a little bit of arrogance. I mean, you need a little bit of arrogance to look at a problem, identify something that hasn't been done before, and believe two things. One, that it can be done. And two, that you're the person that can actually make it. What enormous ego somebody needs to have to, in the total absence of evidence, believe, oh, this can be done. And also, out of the whole world, I'm the person that can do it.
I am the one.
Yes, exactly. And look, don't get me wrong. I have such a huge admiration for founders. To be a founder is almost to be like a demigod. To be able to bring something from the divine plane of abstraction and make it material. Like, this is something physical I can touch. At one point, it was an idea on somebody's mind. Yeah. To be able to bring like a Greek demigod that brings the fire from the gods onto the earth where the mortals exist. This is to be a founder, to bring something from abstraction, from where the gods exist, onto the world where the mortals exist. It's like Prometheus fire. Every founder has Prometheus inside him. As long as they focus on the solution they're trying to work on for the problem that exists, they'll be okay. The moment they stop serving the problem and start serving the solution, they're not bringing liberation for a problem. They're becoming slaves to their own solution. So this will be my final message. As a founder, you have a godlike power in you. Focus that power on solving a problem. Don't fall victim and slave to the solution that you think you have. This would be it.
Nelson, thank you so much for coming to the Investor Talk.
I appreciate the time.
absolutely pleasure for me. Thank you.
Likewise, Massimiliano, I appreciate you so much. I love the work that you're doing. Super, super
Thank
important.
you.
Before coming across EquityMatch, I looked for platforms that make this connection between founders and investors and people who want to contribute as well to this ecosystem. I love what you guys are doing. I'm a user 100%. I hope to see you. I hope to see everybody listening on the platform. Anybody wants to know how to reach me, I will not give out my contacts. You can go on EquityMatch and you can find me there. You're doing a huge, important work for the community. I appreciate you personally for doing so, Massimiliano. And for sure, we'll be in touch soon, as with everybody else that I hope to find on EquityMatch. Thank you so much, man.
Thank you so much, Nelson. Thank you.